afternoon. Salam alaikum once again. Distinguished members of the Ibpc, fellow professionals, thank you very much for coming today. It's a working day, and I know that despite the traffic, what is happening in Dubai with the number of events, you managed to make it on time. We at Ibpc have a number of focus groups, and one of the focus group is AAA, which is into audit, accounting, and advisory. And me as a co-convener, Lakshmanan, standing on behalf of Mr. James Matthew, who is the convener of the AAA group. Unfortunately, James is traveling, so I'm standing in for that. This is our second event as far as the AAA group is concerned, and today's event is on tax compliance and e-invoicing. As you are aware, the UAE landscape on taxation has changed since 2017, and it continues to evolve. It started off with excise, then came the VAT, and then the CBCR reporting, ESR reporting, the corporate tax in 2023, and now the e-invoicing 2024, and the implementation starting in phases from 1st January 2027. Today we have expert speakers from two firms, AJMS and MCA, and they will be sharing their thoughts on the e-invoicing journey what UAE is going through now. As you would have seen, the compliance has increased when you're running businesses, and there are quite a number of professional service providers here to assist you in that compliance, and they will be talking about the e-invoicing and what is it. So in simple form, e-invoicing is nothing but a structured invoice between a buyer and a seller. And you say structured, it's obviously, electronic digital invoicing. You call it as e-billing invoicing, whatever format it is. So the traditional way of doing invoices, such as use of PDF, Word formats, and all of that was going to be no more existent going forward, and I think the experts will address that. Obviously, this will help UAE as well as the businesses in terms of the digitization journey, in terms of the digital economy, reducing the VAT leakage, all of that. One has to be very careful when you run your business because we're going to be leaving a digital trail of everything, and the government will have access to those records and subject to audit and all of that will happen as we go along. And of course, this will also help in the economic contribution to the government and the security-related features in terms of reducing the risk of fraud and etc. So again, these will be elaborated by the experts today. We have 4 speakers for today. The format will be 2 keynote addresses, one from MCA and one from AJMS, followed by a panel discussion with all the speakers. That's going to be the format. Today's event, as I said, is powered by AJMS and MCA. And of course, we have our sponsors as well, the Ibpc sponsors, which without them, we will not be able to have done this event and many other events. I think Ibpc has lined up quite a number of events. So in the interest of time, before I invite the speakers on stage, please put your phone on mute mode for the next 1.5 hours. And if you need to step out for a call, please step out quietly so that, we are without disturbance, we're able to continue the conversation. It's a packed schedule. Each of the keynote speakers will be speaking for about 15 minutes, and there's going to be a panel discussion for about 45 minutes with opportunity for Q&A. So let me take this opportunity to now introduce the first speaker of today. The keynote speak is going to be delivered by Mr. Ramachandran Subramaniam. Ram Subramaniam is a partner, AI Digital Transformation and Shared Services with MCA. He is a seasoned technology leader and finance leader for about 25 plus years of experience. He has worked with the Big Four, with Ernst & Young, he has worked with IBM, with multinationals, and he has held a number of positions leading digital transformation journey across organization, shared services, and he has been in the Gulf region for the last 15 plus years and worked across UAE, Saudi, and other markets. In the past, he has held, number of positions, again, with Big Four firms and driven large-scale transformation projects in ERP implementation, etc. So I now welcome Ram for his keynote address.
Good afternoon, everyone. So e-invoicing is a topic that's spoken fairly in detail across UAE currently. So we're just trying to bring in something that you are not already aware of to make it more interesting. So the technology part is going to be covered later, so I will focus on the business side of things. What we call as transform compliance to competitive edge. So e-invoicing is not just a compliance requirement, there's a big opportunity to bring in competitive edge around that. So what is the game-changing digital reform that is e-invoicing? So what this regulation is, it's a mandatory regulation. It's a real-time compliance requirement, and it's holistic on every business. So there are exceptions listed out in the legislation, but if you look at it, it is applicable as a whole. So there are no exceptions around it. Yeah, we'll talk about the exceptions, the couple of exceptions in that process. So what it means is FTA, which is Federal Tax Authority, accepts e-invoices only from certified ASPs. Okay, so we'll go through what is certified and what is an ASP. The certification for the ASPs will be coming from the PayPal network. So with 2 years prior experience, that's the requirement FTA has mandated. Okay, and every business is expected to sign up with the ASP. Okay, to be able to submit the invoices. So fundamentally, it is an invoice. It's not a PDF invoice anymore. It's just data transfer flowing from your ERP into the FTA system, and in between you need an ASP, which is certified ASP, accredited service provider from the FTA. So that's basically the overall background of what e-invoicing is about and how it is being set up in UAE. So the legislative, what it talks about is the pilot phase is starting from 1st July. It's voluntary. You will still need ASP to be able to submit the invoices. Okay. And then the mandatory phase for all businesses with annual revenue of 50 million dirhams and more is mandatory from 1st January 2027. And the pilot phase, the systems of FTA will be ready from 1st of July 2026. And therefore, you'll be able to start testing. And also, FTA is expecting all the businesses to sign up with the with the ASP to be able to deliver the invoices as a test from July, between July and December 2026. And from 1st January, all businesses are supposed to submit the invoices. The phase 2 of the mandatory phase is for all the less than 50 million companies. That will be from 1st July. I mean, it's not too far. It's 6 months later in 2027, and then the government entity is supposed to come in from 1st of October. So we're talking about within a year, all of the UAE businesses expected to submit invoices digitally into the FTA system. So that's basically how the ramp up is being planned. Compared this with Saudi or any other country which took 3-4 years time, this is an ambitious, aggressive plan to be ramping up the entire ecosystem into it. Right now, the expectation is only B2B, business to business and business to government transactions. B2C is not included right now, but what we know from other countries is that B2C is eventually going to come in. What's excluded from the e-invoicing requirement is the sovereign government transactions, which are not directly in competition with private sector, and the aviation cargo and the passenger transactions, and financial services, the NIIs are exempt, and the zero-rated supplies are exempt from submitting e-invoices. So that's basically the context of what the e-invoicing is about. This is the legislation that's going live very soon. And what the clients are looking for. So what the businesses, so far we've had at least 50 plus discussions, serious discussions, long discussions with our business clients. What they are eventually looking for is a plug and play tool that sits on top of the ERP system that can actually pull the invoices and submit to FTA. Yes, that's the requirement. Yes, well and good. That's what they are expecting. And then single unified platform for the region. So look at it from a regional perspective. Already Oman has announced Saudi is already on, Jordan is already doing, Egypt is doing. So they're expecting one single platform, unified platform, to be able to handle all the countries. This is also another requirement that came out. And compliance assurance, ensuring that the platform has enough capability to sustain and deliver the services. Those are the three key expectations from the clients. They're initiating discussions with the ASPs already. There are 9 already listed out in the FTA portal. There are more coming out and preparing the system for the implementation. So the clients are starting to prepare already on the discussions and looking at the data dictionary of whether they have all the information to be able to submit to FTA. The clients are also concerned about data security. We've had long discussions with many of the clients, especially large entities and government entities, on how secure the data is, will it stay inside. The sovereign data discussion is hot also. And then there are also fragmented legacy front-end billing systems sitting across businesses, which holds actually some of the information that may not be in the ERP. And therefore, the e-invoicing should be able to pull information from all the subsystems as well. They're also looking to estimate the cost of compliance and trying to optimize investment. So people are already seeing this as a cost. I'm asked all the time, what's the cost of this and how are you going to recover this? Why do we need to do this and all these? So my answer to them is that don't look at this as an investment. This is a great opportunity, forward-looking opportunity, and what other countries, the matured markets, have actually achieved. That's my next slide on where it has been implemented and what are the matured markets doing and what they've done already. So e-invoicing is not a new concept that came in recently. This has been around from the 90s in the form of electronic data exchange. I'm sure many of you would have handled that or had the opportunity to work on those environments. But what happened is, post the 2010 era, the matured market, some of the countries, especially it started with Latin America and Europe, they've implemented this big time in multiple countries in Latin America and in Europe have already started that. Primarily objective was to reduce VAT gap and increasing tax revenue. And on the European side, it was more to do with the public sector efficiency and the single market harmonization, which is the VIDA, VAT for digital. So that's the initiative that the European Union has already started in. Key mechanisms, the Latin American started with the continuous transaction control, the CTC. That's, you will hear that again and again in the coming days. That's a continuous transaction monitoring mechanism that the Latin American countries have implemented, and European Union went with the standard approach model. Core value, primarily looking at fiscal control and factoring platform for financing the accounts payable invoices. And on the European side, it was more to do with operational efficiency and cross-border trade, covering inter-country transactions. The quantified impact, significant increase in tax revenues for the government and the potential for billions in savings on the European side. So the matured market shows that there is a big value for the government, right? And therefore, governments are ahead of the businesses in implementing this. So coming closer in terms of the matured markets in the MENA region, we have 2 winners here already. Saudi Arabia and Egypt have implemented at least 4 or 5 years back. The process has started. Egypt implemented what's called the clearance model, not necessarily the continuous transaction monitoring model. But Saudi Arabia went also with the clearance model. The implementation primarily, it's mandatory. So if you look at Egypt and Saudi, almost all of the B2B transactions are included now, with the exception of B2C, which also in the ongoing ramp up in Egypt, and I'm sure that will follow in Saudi also. The volume of documents, we're talking about 1.5 billion e-invoicing documents in Egypt, and Saudi will catch up very soon. They are rapidly growing this. The number of faces and the threshold is being lowered every month. So what's the outcome? I was really surprised when I read this first time. 8.8 billion Egyptian pounds identified as tax evasion and recovered in the Egyptian tax authority. And even though Saudi, there's nothing written about the tax evasion and collection, there's a huge improvement in the transparency and anti-evasion initiatives from the Saudi government because of e-invoicing. So that's basically the context of how effective this has been around the world. and under our own nose, right? So Egypt and Saudi have done a great job of implementing this. So what's the operational value? So yes, one thing is on the government side, there's always a value. We know that this is going to come. As soon as the GST in India or the VAT is implemented, it was always meant for to be optimizing the tax collections, and the e-invoicing is just an enabler. And by implementing e-invoicing, in the matured markets, there's been a big cost reduction published everywhere by many of the businesses. This on the business side, 60 to 80% reduction in invoice processing cost. In the matured markets, in the Western world, this happened around the 90s and the 2000s by offshoring processes to India or the low-cost countries, where they were able to get 40% savings just by cost arbitrage by going to low-cost countries. But in the e-invoicing arena, this reduced cost by 60 to 80% in the, just on the operational side of things. The cycle time reduction was 30 to 50% shorter, primarily because this is in 25, 30 countries, and almost all of these countries have reported 30 to 50% of the AP or the AR cycle reduction. Oh yeah, okay. This is better, I think, yeah. And the error reduction, error and dispute reduction, 70 to 90% fewer disruptions. It's okay. I don't want to get it on my ears. It's okay. So on the compliance side of things, the big change that happened was the near zero tax penalties in many of these countries for the businesses. So this gives real-time inputs, and therefore people are able to react and act, and therefore take the corrective actions very, very quickly, and therefore avoid tax penalties. The tax recovery on the value delivered on the tax delivery is the improved GST accuracy and timely input tax credit claims. So instead of waiting for 3 months to look at the tax credit data, people are able to look at the numbers in real time, and therefore at least a 3% reclaim improvement on eligible VAT. So that's on the business value that businesses have got because of this. So what this is leading us to, this global situation and the learnings from the other countries is leading to, is closing the VAT gap using the unified data format and the traceability of these transactions. So the VAT gap is primarily what many of these governments or federal states in the countries, within the countries, are reporting as GDP or the total revenue that they should have collected, and the VAT recovery is attributable to much less revenue. So this is the VAT gap that countries are trying to address because of implementing the VAT and implementing the e-invoicing. The tracking becomes easy, the end-to-end or the full cycle of the transactions are able to monitor because of that. Rapid transformation from retrospective audit model to a real-time control model. So this is the continuous transaction control that's coming into picture. This is now hitting our audit arena as well, right? So this gone are the days when we are actually doing post-factor audits. The continuous transaction monitoring will become a normal thing in probably in the next couple of years in this region. Eliminate the opportunity for VAT-related fraud. So e-invoicing, because it's real-time, almost all the countries and the transaction posting happens in real-time, it's much easier to identify frauds and track anomalies in the system and through the system and with clear scripts around that. The tax revenue increases basically in all the countries. The government enjoyed that, and therefore that vindicates the global expansion of these mandates across many countries that has not adopted e-invoicing. So this 50 plus countries already have announced or implemented e-invoicing or in the process of implementing e-invoicing, which means that the governments are actually acting faster than the businesses. And as businesses and advisors to businesses, what are we supposed to do? And what questions are we asking the businesses, or what actions we are asking the businesses to take immediately? 3 or 4 things very quickly. digitize the end-to-end of AP and AR processes. This is, a lot of the multinationals have done this already. It's still one leg or one section of the processes within AP or AR is still manual. This is something that's worth looking at from an end-to-end process. No, don't look at e-invoicing as just a tool implementation just sitting on top of your ERP, but will be good if you are able to look at the AP and AR processes completely, end-to-end. Creates central dashboards of real-time data, multi-country and B2C invoices. Several clients have asked me already when we are discussing about the B2B invoices, are you able to load the B2C transactions also? So I'm able to get the real-time revenue numbers through the e-invoicing system. Build a continuous monitoring system to track anomalies. There's multiple tools. In the last 5 years, the technology has developed very big on this area of continuous tracking and anomalies tracking. And invoice acceptance through the e-invoicing to reduce rejections and use the e-invoicing to sort out disputes. And you can actually make e-invoicing acceptance as a mandatory with your businesses. Automate accounts payable and receipt invoices using e-invoice data. So these are the 4-5 areas that you can do. So this is on the accounts payable side where you're able to receive the e-invoices and you can get rid of all your scanning solutions and all of that workflow solutions. Invoices can hit directly into your AP process. So those are the 5 or 6 areas that you can look at potentially as a benefit of implementing e-invoicing. So how do you approach this as a process? So what do we do next is a 6-step process starting from November, December till April, June. I've stopped at April, June because from July I'm assuming you will be ready and therefore you're able to start testing the invoices with the in the FTA system. Start with a quick November, December timeline, engagement initiation, and do a proper gap assessment and look at what are the processes, how are the functions working, what are the invoice types, how it is flowing into the ERP, and what's the best time we can pick up these invoices for submission into FTA. The gap assessment is a critical task. Look at all your controls and control environment and prepare a roadmap. So that's critical. And once you're able to do that, take that into a implementation phase in the next 8 to 12 months, 8 to 12 weeks, starting in the April-June timeline. I've just marked also the blackout time during the year end and the Ramadan time. Yeah. So quickly, preparation, early preparation still matters because technical integration and process design, staff training, all those things take time, and therefore you may think that there's a lot of time, is still not enough time actually. And there's going to be a big rush next year on this, and therefore early mover advantage is always good. And therefore the point is that e-invoicing accelerates automation, improves productivity, and enhances user experience. And therefore, don't wait till 2027, get the action now. Thanks a lot for listening to me. My name is Ram. This is MCA and Taxila Consortium presenting this. We are also working on a couple of major projects and bids that we are on the invoicing side with the government entities. With our experience in running through the VAT and the corporate tax area, we are also able to get into this e-invoicing and be able to support you in your initiatives. Thank you.
Thank you, Ram, for taking us through how the transform compliance to a competitive edge. Distinguished members, you will be hearing the word ASP very frequently in these presentations. There's nothing but accreditation service providers, and I think from what I know, both AJMS and MCA are in the process of seeking this accreditation. So I now invite Mr. Sangamesh Shirimath, CEO of Marmin Technologies. Marmin is part of AJMS Group, and Sangamesh comes with a very interesting background. He's an MBA from IIM Bangalore. He's a Bachelor of Engineering from BTU India, and he has done a postgraduate program in AI, which I think today is everything is revolving around AI. So he comes with that AI and machine learning experience. He was the co-founder of Marmin Technologies, and they've been 20 years of experience into this field, particularly in the area of business consulting and technology and management. He began his career in the manufacturing sectors and then He has understood business operations. He has been across in different countries, and he has been into supply chain and many other areas before being the co-founder of Marmeen Technologies. He travels, I think, between Bahrain and Saudi frequently, and apart from UAE. And he's going to talk us today about how to build the backbone of this technology. Because as we said, E-Invoicing, which means it's electronic. So we need technology for that, which is what Ram spoke about. How, from a technical perspective, what we need to be aware of, he will share his insight. And a request to all the speakers, if you are standing from here, I think there is some issue on the voice, so better to stand closer to the mic and speak. Thank you.
Right. Speaking about e-invoicing, though this is a term which is very commonly being used in UAE now, the main problem is everyone is selling e-invoicing, but no one is talking about how to implement it. What are the technical angles of it? What are the challenges? That's what we are going to speak about. I'll showcase little points around it so that while you carry this message in whichever organization you're going to deal with, you have the background that, okay, how we have to approach this problem or this challenge of implementing in a very short period of time. Though it looks 1 year, it is not, right? A brief intro on AJMS. AJMS has been into UAE across various regulatory technology and consulting platform. E-invoicing is now part of their umbrella again. These are all the companies. E-Invoicing Award of the Year. Okay, speaking about different accreditation, where we come from. The first country which we entered was Saudi Arabia, that too in 2020. And the kind of model Saudi Arabia implemented was very unique. Every country approaches e-invoicing saying that, okay, we will go B2B first and then B2C later, because adoption is a challenge for the market. In B2C, there are SME segments, there are smaller players who do not have enough technical capability of integrating. Saudi, being very unique, says everyone has to do this at a particular deadline. So if a business has to comply, they have to comply for both B2B and B2C, right? That's how it was. Saudi, as Mr. Ram mentioned, has done this over 25 waves. And by next year, June, they will reach that 375,000 Saudi Riyal threshold in which all businesses registered under VAT will have to comply, B2B or B2C. These timelines are very broad, whereas in UAE, it is highly aggressive from our perspective. We are certified in Malaysia. We are approved PayPal access point provider for a very long time. We are approved in Saudi Arabia, and we are in process in UAE. Right. This image speaks about the expected volume of e-invoices in UAE. Now, where is the source of this data? This data has been picked from one of the tendering proposals which we received as a PayPal service provider. And from there, if you see, the first year, I'm intentionally mentioning this as 2026, but the actual number of documents generated will start from 2027. In the first year itself, per day electronic invoice generation is 3.15 million per day. And going forward, after 3 years, this grows threefolds. Reason for that? Is it business expansion, increase in the size of the market? No. That's where we predict it will be B2C. That's where we predict that increase in the volume of electronic invoice generation will be from B2C sector, retail sector. So each point of sale, each retail equipment which is generating invoices will have to in some form deliver invoices to FTA. Right. Now, if we speak about e-invoicing adoption, currently there are 90 plus countries in some form either implementing or already have implemented. Now, specifically, I have mentioned different documents in this process. While currently the hot topic in UAE is e-invoicing or e-invoices, different countries are adopting different format for additional reporting. For example, e-receipts is all your retail invoices. E-bookkeeping. Poland and Norway are asking for reporting audit files in terms of accounts receivable, accounts payable, inventory, journal entries, and fixed assets. So do you think this might happen going forward 5 years down the line or 10 years down the line in UAE? If yes, then today is the day you start preparing for it. India and Greece, each delivery receipt or each delivery to any customer about material or service, that has to be also reported. This is to align with what the purchase order speaks about and whether the sale is happening according to that and delivery of service or material is happening according to that, and finally the e-invoice. So whole procure to pay or order to cash process, depending on what side of business you are, is being reported to authority in some country. Then finally, after all these transactions have been done, there is reporting of the tax data. Okay, that's what we are reporting as tax data reporting. You have to report transactions and then you report tax. You might also say that, okay, while they have transactions, why they do not calculate tax by themselves? Because they want to really validate what data you are submitting from your source, what they have received, and what the buyer has received. That's where we say from e-invoicing, it's going to be a complete electronic digital trade going forward. The technical aspect of how to do this, it's all about readiness, right? Today, UAE speaks about 50 mandatory fields. In Saudi Arabia, it is 123, including optional and mandatory. And overall, the PEPOL framework supports around 3,000 fields. So depending on which side of business or what type of vertical you have, shipping industry might be something mandatory depending on the process, retail might be mandatory depending on certain process, that all flexibility is there. But FTA says you give me 50 minimum. Beyond that, you want anything, you can add it and send me, my system will accept. Right? That's how it is. There are systems in the market which are quite old. They cannot integrate with any external system. We have customers in Saudi, in Malaysia, who do not have any capability in system to integrate from external servers or external authority. How do they implement this? Should they go ahead and implement their e-invoicing? For e-invoicing, should they go and ramp up everything, replace their ERP and do this? No. It's not possible to change your whole process which has been running for last 20 years in the organization, and you suddenly, for complying for e-invoicing, you had to go and retrofit it. Not possible. That's where any e-invoicing provider has to provide you that layer of compliance in which you understand how the data has to be supported and how the data has to be sent and reconciled. When we say reconcile, this is not accounts-based reconcile, debit and credit. No, it is to reconcile whether the transaction generated from your side, was it delivered to the authority properly? If it is delivered, do they have a copy or not? That confirmation you should have as a business. That's what you will look at it when you generate an invoice and integrate. We are aware of a customer whose supplier said that they have integrated with authority and the invoices are going. And then later, after 6 months or 8 months, the customer realizes that there has not been a single transmission to the authority because authority has questioned them that why you are not sending us invoices. But this customer was not clear that it was being reported, right? That's where they had to switch supplier and they came to us. One example. You as leader, you as business decision maker, while you implement the invoicing, as a leader of the function, you have to really see whether this is running or not. I will show some cases in the kind of questions which comes later after implementation, which businesses face and they're clueless about it, how to handle, right? Is the time up or it's someone's phone? Sorry. Right. Many countries, they also decided on whether should we really want to have an ASP. ASP is approved solution provider. Should we really go with them or shall we build by ourselves? So different countries adopt different model. Saudi gave both the options. You can use a ASP or you can build your own. So they had given software development kit, which you can integrate using your ID team and transmit data. That was acceptable. But in UAE, it is clear. I need certain standardization. You have to appoint a person. Now, if you see the current list of ASPs, you would be surprised why big ERP OEMs are not in the list. It's because The change itself is so big for their organization. For localized delivery, they are taking time to deliver. And providers like us are quick enough to, enter the market and deliver the solution. That's where the thing comes. But as of today, in UAE, decision to build is irrelevant. You have to really go buy or subscribe to some provider, right? While you are adopting a solution, there is an aspect of interoperability. I do not know how many people understand this term. Should I go deeper in this? Interoperability means I am generating an invoice in my format. It should be acceptable by your system automatically. You cannot have a person sitting and counting each invoice, accept, reject, accept, reject. So there should be easy acceptance. So if I use SAP, you use Microsoft, it should be easily readable by your system, and any data coming from your system should be easily readable by my system. That's what the PEPOL system is bringing in. Now, this is more to do with standardization, saying if this profile extends to any other country, it should be acceptable. I sit here in UAE, generate an invoice, it should be acceptable by USA, right? They are also working on the same kind of framework. This is for reducing the friction in the trade and increasing efficiency. One aspect which we have seen in many implementations is while e-invoicing is a project, it is either driven by finance or it is driven by IT. But everyone has to really understand this, that it is the decision of the leadership, but usage will be from the last person in the workflow, which is an accountant. Decision taken at the top, while it is not well understood by the accountant, the process fails. We know of a customer accountant, you know how in Saudi, the accountant function is mostly either outsourced or dependent on external workforce. The person who created invoice, it was sent to the authority, it got rejected, and it was in red color, right? We give that color notification. This person really calls me up on my phone and say, I am in trouble. I said, what happened? Invoice is rejected. So what? No, will the authority come back to me and hold me responsible for this? This is the kind of feeling they have, right? So the real challenge is in each organization, be it a group or individual company, individual entity with single ERP, the problem is understanding the scale of this impact. If you do not foresee the scale, your implementation will be weak. One company which is basically from UAE but operate in Saudi, they use us. What they did, they integrated their ERP. We keep asking them in gap analysis, is there any other system you have to integrate? They were not in the process of going through the e-commerce route, but later when they implemented e-commerce, they completely missed out integrating that system. So they had to really hire another team which can quickly adopt to this integration and integrate with our system. So all these things play out in an implementation. Another important thing in the process is execution. While you understand, while you prepare, you're ready, you're all set, all teams are well up in terms of understanding, there is execution challenges, right? Execution, complexity of each implementation, each ERP, a group company has 40 companies using 40 different systems. How many times and how you will integrate these with a particular ASP? Imagine you have one ASP and 40 ERPs to integrate. Big task. So certain standardization, certain clarity has to be there. That's what we mentioned here. Multiple ERPs, multiple verticals, multiple process variation, but one single deadline. How do you achieve it? Right? You have to really build your cross-functional team, your IT, your procurement, your finance, your accountants, your GRC team, your cybersecurity team, all have to align for any invoicing project. You cannot have e-invoicing implementation being done in which you're not taking care of cybersecurity. I don't know how many people, how many companies look at this in this way, but we have experienced this, that later it comes out that, okay, the solution provider is in Saudi Arabia, but his solution is deployed somewhere in US on Amazon Web Services server. Not aligned with the expectations of the implementation. E-invoicing is not a step in the whole journey. It's not an endpoint. What I mean by saying this is you're just entering the first step of digital trade. Furthermore, have to follow, and this is a continuous process of change. You have to really adapt based on your business scenarios, your market dynamics, your verticals, exact process, how you have to align, because all your business, all your sales force, all your ground team has aligned to certain process. They have to align to this. There are businesses who generate, our system generates easily 12,000 invoices per minute. But if you are a business which is operating at this scale, how do you reconcile? How many people you have to deploy to make sure that none of the invoices are rejected, or everything is green, or everything is properly delivered, and that particular record is existing in my ERP as a proper posted invoice, right? You have to reconcile, and that too reconcile at scale for the kind of volume you deal with. There is also the aspect of building your ASP's redundancy. You have to ensure that the ASP provides redundancy. What does that mean? Recently, there was an incident in another country where the authorities' servers went down. What happens? If you are in retail business, real-time transaction creation, should your business stop? No. You should have a failover mechanism in which the provider should immediately give you another system, or they should provide you a queuing mechanism in which your business does not stop, but the transactions keep getting collected. And whenever the authority system is up and running, it starts transmitting, right? That's what we ensure in various regions where we deploy. Security, we spoke about that, GRC aspect, data localization, all ISO related certification, encryption, that aspect is anyhow being taken care by FTA while getting approved, while approving a ASP, right? This is a journey. It's not a point where you have to stop implementing e-invoicing. If you see, this is all post-implementation facts which people deal with. Accounts payable is saying, wait, do we have a PEPOL ID or we have multiple PEPOL IDs? So PEPOL ID, I would say, is like, phone number. If I am a seller and I want to send you a document, my PEPOL ID will interact with your PEPOL ID. It's more like saying my phone number has to make a call to your phone number, right? That should be in place. And you keep collecting these PEPOL IDs from your business partner, seller or buyer, whoever you're dealing with, okay? There are processes in which you decide to implement and transmit an e-invoice, but you do not make a posting of it in the background. How does that happen, right? There are businesses who have done this. They send an e-invoice to the authority using a system, but that invoice is not captured in the backend ERP. Reconciling becomes a challenge. IT says, okay, why did you not test it properly before going live? There is always a time pressure. There is always a deadline pressure. There is a huge coordination issue between different departments to get this executed, right? Supplier always keeps calling you after this process. He'll say, did you receive my invoice? In Saudi Arabia, QR code is mandatory on invoice. Now there is an accountant always sitting and scanning the QR code for each invoice. So what people are doing is just copy certain QR code on the invoice and send it, who don't want to comply, right? So the job of the accountant is to have that either scanner or use a phone to detect whether this is legitimate invoice or not, right? So these things are there. Buyer, while you are obligated to send an invoice to him, he has to also retain a copy of electronic invoice along with the PDF, and both of them have to match, right? So he will keep saying you, send me the PDF as well as the XML. Then how do you go and tell your accountant, send him an XML? How many of accountants do know what is an XML and where to extract from it, right? These are different aspects post implementation. As I said, one example from our recent customer, their leadership did not know that the implementation was done, but the documents are not getting delivered to authority. The monitoring aspect of the implementation was not in place. These are different challenges. With this, just showcasing certain brands we deal with in different market. Yeah, your favorite Batil is also here. They use us in Saudi Arabia. Many other brands. Sotheby's is already live in UAE on our platform, but this is live in terms of usage of regulation, not transmitting documents to authority, because their deadline is in future. Whenever it's applicable, they'll switch on the button and go live. That's all. Thank you. Thanks for your time. Thanks for listening. Thank you.
Thank you very much, Sangamesh, for an enlightening session on the technology part. Now we get into the second half of the event, I should say, a panel discussion. Panel discussion on e-invoicing and the way forward. And I have the distinguished honor of inviting first the moderator of the session, a dear friend and my colleague, Mr. Girish Chand, who will be moderating the session. Girish is a senior partner with MCA Gulf, and he heads the compliance practice of taxation, VAT, ESR, AML, UBU across Bahrain, Oman, KSA, and UAE. He has conducted hundreds of seminars, webinars on these subjects, and he's also a TADAT trained tax professional, which is the tax administration and diagnostic tool. He contributes regularly to the UAE media, and as well as, he's the Secretary General of Dubai Accounting, Auditing and Taxation Business Group. This is again under the Dubai Chambers. As you may be aware, Dubai Chambers has a number of like focus groups, and this is one of those groups where Girish heads as a Secretary General. He has altogether about 35 years plus of experience, worked across leading organizations, including ENOC, where he headed the CFO role, and EPCO, as well as in being involved with several leadership roles within the organization. May I now call upon Girish to be the moderator. I think the names have been put on the chair. So, Mr. Girish, can you please take your seat? Let me also have the distinction of inviting and introducing dear friend Vivek Mundra, who is a managing partner of AJMS Global and the co-founder of Marmin Solutions. Vivek is an entrepreneur, and he has been bridging the regulation and business growth and innovation. And he translates complex regulatory framework into practical growth-oriented strategies that drives compliance, efficiency, innovation, and across the public and private sectors. He has been in the region for a long time, and he again travels. It's a regional role. He travels quite a bit. So Vivek, thank you very much. Please take the stage. And the rest of the speakers, again, I want to introduce them. Mr. Ram Subramaniam, partner Digital Transformation Shared Services, MCA. Since we have already introduced Ram, again, please, Ram, can you just take the stage? And last but not the least, dear Sangamesh Hirimat. Sangamesh, again, CEO of Marmin. I would now leave the floor for Girish to moderate the session. The session is for about 45 minutes, including Q&A. So feel free to ask whatever questions you want.
Good evening, ladies and gentlemen. I think I've come to the Ibpc after many years now. Okay. So good to see some familiar faces out here. Right. I think when we talk of this topic, we just got off the corporate tax compliance. Okay. So we have one more compliance that is coming to the fray in the form of e-invoicing. How many of you were here during the VAT days? I think majority of you been here 2030, so obviously many have been there during the VAT days as such, right? And we went through a journey of primarily, preparing for VAT, okay? And I still remember 2017 where people were saying that, okay, VAT will not come, and then it dawned. And then again, we were left with organizations not prepared. Right now, this is a mini VAT implementation. Maybe you don't have so much of the VAT treatment elements which you will have to do, but obviously you will have to look at it from the system perspectives, right? Because now you're going to translate from actually generating something which are the your manual invoices to an e-invoice as such, right? So this journey also involves a set of preparation, and as usual, we consultants will tell you, prepare early, but there is always a background behind that, and I think both Ram and Sangamesh's presentation kind of gave you an indication that although we say that there is almost a year for us to implement e-invoicing, But considering that this is a translation from your manual invoices to the, electronic invoices, there is a fair bit of preparation also that we need to do depending upon your organization complexity as such, right? And I think today my job is very easy. I just have to ask the questions, and we have an illustrious panel here who can basically answer and provide us guidance. So what we have done is that primarily we have, collated, I think there have been few questions also from IBPC members, right? But as a general, we have basically divided into A, okay, what is the landscape, B, what is the complexity, and C, the element of how do you really prepare as far as the e-invoicing journey is concerned. So possibly I'll start off first with Ram in terms of, primarily maybe you can give a background about why e-invoicing is being introduced in UAE. Although you did cover a bit of it, but just from a perspective of talking specifically.
Yes, thanks, Ganesh. So the stated objective in the legislation itself, it says it's optimizing the VAT computations. E-invoicing is being introduced. So that's one of the stated objectives, and the main objective of e-invoicing is to make the process real-time and digital. Therefore, the process becomes easy for everyone and the entire ecosystem to evolve into something that's easy to manage. So this is again, as I said in my keynote lecture also, that this is not something that's new. So this is just a different form of digitalization that's happening now. And this time around, it is a lot more end-to-end, and the entire life cycle is being looked at, as Sangamesh also pointed out. We are moving into an era of digital trade. So e-invoicing is just the beginning of that. VAT automation is one aspect of it, and then a lot more elements of the trade itself will come into e-invoicing.
Yeah. So maybe Vivek, you can take on and possibly elaborate in terms of what real world changes it can bring about as far as business is concerned.
Thank you so much, Girish. So I think everyone has spoken about compliance, right? I mean, it's how this is a compliance journey, moving from corporate tax now to invoicing. I'll probably take it in a different route, more from a business perspective. We saw the data, 30 million invoices almost on a daily basis, probably 5 years down the line. We are talking about 50 fields mandatory, and PayPal probably provides us 3,000 fields. What is happening with so much data? Where is it really going? So is e-invoicing is just digitalizing that invoice, or is it really live financial data? So what I see in future, how it is going to move towards, we are talking about live financial data, and where it is no more just a compliance, it is creating that level of trust between buyers, sellers, and the government. Now what this trust eventually moves, this is a kind of a digital trust, which can move into not just helping you move towards your compliance journey, but help you to unlock your capital. Now, where does capital comes into picture here? Imagine these are real life financial data, real invoices, validated, verified, vetted by authority and all the providers. Can that become your collateral for a funding from banks or lenders? Yes, definitely yes. And this is where probably in future it will move towards. And I'll just take an example and probably look more from a macro perspective. We have invoicing which is coming next year. We already have an open data framework which has been given by the UAE government, and then there is open finance also which is coming into. So where is this whole open data going towards, right? This is all going to that booth where eventually the live financial data can be used, and that data can eventually be analyzed for unlocking various other things. So it's no more just a compliance journey for me. It is actually moving towards a much wider scheme which CFOs or the business owners should really think while going towards that journey.
Thanks, Vivek. I think hopefully people start looking at it, beyond compliance as such, yeah. Now the other thing is, I think maybe, they spoke about it. There is a 5-corner model, right? Today, or when the e-invoicing comes in, it is no longer between you and the buyer, right? There are 3 parties additionally coming in, and I think there was a reference to ASPs as such. So maybe, I'll ask Sangmesh to throw some light about, why this intermediaries have come into this whole process.
Thank you,
And
Girish.
what is their role?
Yeah. So one example, again from other market. Initially, the government listed 1,000 plus suppliers. And currently in that market, only 200 to 300 suppliers are capable of integrating to authority. Now, why this happens? This happens because the regulation is always evolving, and the parties or the suppliers who enter the market to just deliver or make a killing in the blue ocean, they have to realize in a hard way that over time, as regulations evolve, the system also has to evolve. And if by any chance the system is lacking, they are out of business. Right? That's where the government of UAE says we bring ASPs who are having enough experience, enough capability, who can operate at scale and then still remain in the market. Right? This is one aspect. Second is standardization. As I mentioned earlier, there are businesses which use JD Edwards as an ERP. Is anyone aware of this? It's quite an old system. This was one system which was acquired by Oracle long ago, and still businesses use it. There are businesses who are not even patching the system because there is so much of vulnerability associated with this system that they have completely isolated the system from internet. Then these people cannot change their ERP overnight. So ASPs bring that layer saying that, okay, you just bring the data in, we will standardize it and transmit. And this ensures that all businesses, whatever ERP they are using, even if they are not using any ERP and they can capture data on Excel sheet, they can run on e-invoicing using a ASP. So that capability is there in market.
Yeah, and maybe to add to what you have said, Sangmesh, is that effectively when we talk of the ASP, it is a dual role. One is effectively with the customer or the buyer, and also there is an element of actually acting as the conduit for making the transfers to the FT.
Yes, sorry, I missed this because I have spoken so much on PEPOL 5-corner model, I really avoided speaking about it now. Right, this PEPOL 5-corner model, as I mentioned, it will standardize your data from your seller and let it enter your ERP as a buyer. And on both the sides, buyer and seller have their ASP. And ASP is that bridge which is making sure the data is completely consistent and acceptable by the receiver. Another question which usually comes to us while we are pitching PEPOL 5-corner model to businesses is, what if supplier keeps sending invoices? How do I reject it? There is no option to reject as of today. Other markets, it's there, but as of today, in UAE's regulation, there is nothing like that. The only way to work around with this is ask the supplier to create a credit note and reverse the transaction. But there will be fine-grained print coming on this very soon because now the regulation has come that will sure be adopted and make in line with the process available in the market.
Thanks, Sangmesh. Okay, now we move to the second part in terms of understanding how this whole thing will work. Maybe Vivek, in terms of understanding, what can UAE learn from this adoption which have happened in the other countries as such? Yeah.
Sure. Thanks, Girish. So let me take a couple of examples. Obviously, we have seen 90 countries where it is already live, and we do have success case stories or the learnings from those part of the world. Let me take South America, Mexico, Brazil, right? These two have been live on e-invoicing for quite some time now. And what have we really learned from this? And again, I go back to that from a compliance to capital journey. Invoice discounting or revenue-based financing. How many have you heard about that? Right? I'm pretty sure many of invoice discounting. So you have your invoices, which someone can come and discount instead of you getting payment after 3 months or 6 months. Those who work with government know how struggling it is. Someone can pay you today at a certain discount rate. What do they really want? They want to see whether your invoice is vetted or not. It's a verified invoice, right? If it has gone through that particular process of invoicing, and if it is really a vetted document, and if someone says, hey, you know what, this is a valid document, I can give you money right now today itself, instead of you getting paid after 6 months. What happens? It unlocks working capital for you. This is what is happening in Mexico and Brazil, where the invoice discounting, revenue-based financing has really spurred. The SME lending segment has significantly gone up. Why? Because of these particular process, where the government has kind of opened up this whole thing for small SMEs. It is no more just a compliance. It is in fact going much more beyond it and helping you to unlock capital. Let's take an example of Egypt or India, where again, GST has been there, we have the invoices there. The same thing is happening, right? Where the buyers and suppliers are kind of not just getting their invoices vetted, but also integrated with various immediate platforms, which helps them to either collect payments, could be cross-border, or do payments on an immediate basis. So where exactly UAE will eventually move towards, and again, just to couple of days back, Malaysia opened up your purchase orders needs to be also go through the people, right? Which is very interesting. So if you look at not just accounts payable, but rather your complete procure to pay cycle is something which is getting vetted, and you have to provide those transactions right from your PO to delivery note to whatever negotiation till the invoice to the government. Why? Is it just they want that validation of that data? No, obviously they are using that, but it also creating that trust within the whole thing. Now you as a customer, as a business, is providing this data, creating that trust for the government, but this can be created for someone else who can provide you capital or provide you perspective from that. So in my perspective, where UAE will move, or the learnings from the other part of the world, is as a business, you should be looking into how this can be integrated with various other ecosystem players and not just one single thing from a compliance angle.
Yeah, thank you. I think you give a very broader perspective, maybe 5-10 years. Of course, there is the one element also, which is the immediate one, is possibly when we talk about, the VAT automation element of it, right? I expect that once this whole thing is rolled out, I don't think so you'll have to submit a VAT return. Yeah, only maybe you'll have to validate the VAT return as such, yeah. So that's something which is coming up, and obviously the digitization process that I think all of you all spoke about. You want to add something?
You cannot escape the responsibility of submitting a return.
Yeah, but at least it will make your life. See, today, Sandesh, what is happening is that when you talk of VAT returns, you have, all the beautiful systems, and then you have the finance function. How many people from finance here? Yeah. And then you have the finance function where, there is a guy sitting and he's doing that in Excel and then transmitting onto the VAT returns. If you agree with me, put your hands up. Yeah, so that is the current state of the thing, and maybe that is the automation that hopefully will come in where people can move on, right? The other element maybe we need to, kind of dwell upon is that we have to remember that this is something which is happening in phases, right? We are talking here about B2B and B2G, okay, 50 million, below 50 million, and then we have the B2C. So Ram, how does the organization navigate? Because I am today implementing e-invoicing. My basically customer is not ready, okay, in terms of the invoicing. So what do I do, and how do I navigate this?
Interesting question. So now what's coming live for the more than 50 million large enterprises is B2B and B2G type transactions. They also have B2C transactions, and they also have ecosystem of purchases that they are making, and the invoices that they are submitting to are smaller enterprises, less than 50 million. So they are actually going to start receiving invoices outside of e-invoice, and they are also going to be sending e-invoices only to FTA. The other leg is going to go outside. I mean, the current processes. The e-invoicing implementation in UAE, let's all understand, this is primarily an add-on system. Your current legal process of submitting invoices with your customers and with your suppliers, that process is still going to continue till the time we actually agree with our vendors and customers. Till the time e-invoice submission and report process around the systems and the technology is an additional step that we need to do. And 2027 that way, when the whole thing starts, it's going to be a transitionary period. You are going to have part of your system running on e-invoice and part of your invoices going outside the system in your current processes. So we are, in terms of the large enterprises, we are actually requesting them that get all your suppliers onto e-invoicing, or request them to come on to e-invoicing. Like the big companies are doing, they have a vendor portal, ask all your suppliers to key in the invoices in your system E-invoicing actually is even more easier once that's implemented correctly with one of the ASPs. The e-invoice actually can flow to the businesses directly. So 2027 is transitionary, and then by end of 2027, it's going to be a completely digital ecosystem of e-invoicing flowing through on both your AR and APs, I mean both on your customer side and on your vendor side. In terms of the B2B and B2G, a lot of enterprises have this hesitation that, okay, I have a huge chunk of B2C transactions, I have a couple of transactions which is export, a couple of transactions that's RCNs. I would recommend that don't look at all of those 1%, 0.5% exceptions. Look at your big chunk and make sure that you are able to post all these transactions and make sure that you have a good solution and a gap assessment done today for all your invoice types, and make sure that you are starting to build that solution now when you have time. That's number one. And number two, there are a lot of clients asking us also, okay, this is great that I'm sitting in the corporate at the headquarters, I have 10 divisions, multiple locations. I don't know actually till the time they submit the revenue numbers to me. E-invoicing is going to be real time, and if I'm able to get the consolidated revenues in real time, can I also use it? Can I also upload the B2C transactions and not submit to FTA? Can I get a full analytics out of this e-invoicing? Because this is verified data that's going to the government, right? And therefore this is authentic. And this also we are trying to enable our clients on that, give them a full view. So there's two legs happening in 2027. While you're going to have two processes, you're also going to be enabling your finance leads to be able to look at real-time revenue, which they never had access to, even with the best of ERPs. Yeah.
Thank you. I think one of the things which possibly organizations who are below 50 million, if you think your deadline is July 2027, please think again, because you have to look at it from who are your customers. And if your customers are large entities which are in the 50 million, they might force you to start getting onto the e-invoicing platform. So one element of it is, look at the deadlines from a perspective of your ecosphere, right? So maybe that element can also make you come earlier into the e-invoicing flow as a voluntary basis, but that is business-driven decision per se, yeah?
One comment here, Girish. In Saudi Arabia, while there was emphasis on businesses to implement based on their revenue threshold, these businesses started influencing their suppliers also to implement e-invoicing. How? The accountant who was sitting in accounts payable function, that guy clearly says, I will not receive any invoice without QR code. What does this result into? Change. Adoption of change in the market. And there will be such network effects which will actually push faster adoption in any country.
Yes. I think we have a live example of Saudi Arabia also doing that. Samanish, back to you in terms of what are the IT complexities which are involved as far as when you talk of the invoicing implementation as such, yeah? You did speak about them, maybe it's a...
Yeah, I'll reiterate. The biggest problem is not the system, biggest problem is not the tool, biggest problem is not the technology. It's a process within the organization. And in an organization, you will not have one single person who knows everything. And when you're trying to implement e-invoicing, you'll have to catch hold of 3-4 departments and make sure they align in this journey, and then you implement e-invoicing. That is the biggest challenge, because certain functions say, no, this will be not going through e-invoicing. Another function says, yes, it has to. Then comes the tax department. They say, no, it has to go, it has not to go. Let me check with the auditor. Let me check with the authority. All this will happen in an implementation.
Thank you. I think like what happened in the VAT, no, you can't say that it is a function of finance or basically procurement or sales, right? Anybody who is basically facing whether on a procurement front, on an invoicing front, legal front, okay, all these are now going to come in. So obviously when you look at an organization, depending upon how big the organization is, right, you will have to go back to your VAT implementation days and see what was the team that were basically formed and approach it in a similar manner as such, right? Now coming back to Ram, okay, how do you go about this whole implementation process?
Yes, interesting question. So if you look at, okay, let me start with the more than 50 million dirham companies. So primarily you need to start with a gap assessment. Look at how many entities you have, how many transactions are flowing, what are the invoice types, what's unique about this business. So we need to do this, let's say 4 weeks or 6 weeks, fine. Needs to be dedicated and kickstart a gaps assessment of what's needed. So we are seeing that clients are actually starting on the other side of the end. Okay, there is 50 fields needed by FTA. I have 36. What are the 14 you tell me? Then I will ask my entity to do it. Then thing is done. It's not that simple actually. You need to look at it with the perspective of what are your processes, what is the business impact, and what's the policy impact of your processes changing, and also who will own this FTA data, right? Is it finance, is it procurement, or is it the businesses? So it's something that could be different for different entities, but that's a call that needs to be discussed in detail. So that's a 4 to 6 weeks of effort entities should invest at this time, rather than hurrying it up on thinking that this is just adding a few fields in the ERP system. So that's number one. And then once the gap assessment and the analysis is done, and you know exactly what are the 5 or 6 things that you need to change in the ERP, that's the easier part. And then the implementation also, we need to look at, I mean, there are entities here, we are talking big government entities, we are working with them, 100 plus entities, and how do you group them? Do we do a big bang of all 100 entities going live at the same time, change, implement, test and all that? The best way is how we always implemented ERP, group the like entities, like industries, similar processes, similar ERP systems, group them and then do it in a logic step-by-step way, in a phased manner. So we can take time, at least now, you can learn from the first phase, implement the corrections in the second phase and all that. We still have a 3 or 4 months time, let's say starting between February and July of next year, and be able to get ready and be able to start testing when the government systems are ready from July. And also take that effort, as we discussed in the last question, look at your ecosystem and advise them or take them along also, and make sure that all your key suppliers and key customers are also on E-Invoicing, which will be beneficial on both sides of efficient processes, and also it will, as Vivek mentioned, on the transactions and the working capital optimization and all that.
Thank you, Ram. Okay, now we basically also, we're saying that no longer it is a question of you and the customer. Now you have, somebody called an ASP, right? And who will be kind of your partner in terms of this e-invoicing implementation. So, Vivek, what is the key, features or technology features that you need to look while you're selecting this partner or getting into a marriage with them, yeah?
Yeah, thanks, Girish, for that question. Again, I'm pretty sure most of the businesses would be under this, right? That what exactly the criterias we should be looking into. There are currently 9 pre-approved players. What we understand, it could be much more than that. 750,000 plus companies to be integrated over the next 6 to 7 months. Timeline is short, companies are not that much, so everyone is in hurry to kind of select that. But what parameters you should eventually look into, that framework where you can actually say, okay, if this is thing, this is the best service provider for me, right? Like any normal procurement, you create a framework. So for me, probably that is 3 I's which I will look into: integration, intelligence, interoperability. Let me break that into things. Integration. I think my dear friend Sanmesh clearly mentioned about the whole thing, right? Integration is the key. You might be working on SAP Oracles, you might be working on JD Edwards 20-year-old, or you might be on the Zoho Tallies or Zeros of the world. Is your ERP able to integrate, or rather that ASP is able to integrate with your ERP or not? Right? So that's the first and foremost thing. How easy is to implement that system? Integrating with your existing players rather than rehauling all your processes just for one single node within the overall process. So integration becomes the key. Their features, the technology, whether it is able to integrate in the most simplest manner or not. Intelligence. Now, where does that really comes into picture? Once you have integrated, and I think Ram mentioned this about this, the whole dashboards, right? Now I'm providing all my data to this company, the service provider. Is it able to give back to me, which will help me in my decisions? Yes or no? So do they have those interactive dashboards as a freebie within the overall tool, which will help me not just comply with it, but also help me in my decision-making processes. Eventually, all my receivables are payables now going through that. So is that helping me towards that broader intelligence where I as a CFO or business can take decisions and then move ahead? And the third one, which is critical here, interoperability. What does that mean now? Which means, does this allow me to integrate with payment service providers, cross-border payment platforms, lending partners, technology service provider? Is that ecosystem also coming or not? Right? So if these three I's comes into picture, then you're not just implementing a system, you're actually investing in a system which will have a proper TCO at the end of, let's say, whenever 3 to 4 years, right? Where you start recouping money because of this whole aspect which has been provided. So yeah, when you're looking into ASPs with this 9 or even it may go to 50, as people might say in the market, look at these aspects. And I think integration is the key, which is initial 6 to 7 months, because that's where you will be implementing. So within that, the local support, the experience, everything eventually kind of boils down to that.
Yeah, well put, Vivek. I think and one of the important factors is also that, get early on the platform, like he gave the maths. We're looking at 750,000 entities and we are talking of possibly 100 players in the market. So, the sooner you integrate, you might also beat the cost of inflation, like they say, yeah. So when you go in the last stage, the cost gets more. See, last question, I think, Sanmesh, to you. We have spoken all about the implementation and all. What do you think would be the key success factors of a successful implementation? You have done it in multiple countries. So what do you see the key success factors?
When we provide a solution to business, we are driven by one single motto. After the implementation, we should only go back to the customer to collect our invoices, collect our payments, which means you should implement a system in such a way where it is completely invisible to your day-to-day business operation. Agree with me? Right? That's how we see an implementation. If there are repeat issues, repeat transmission issues, system downtime issues, then we have to talk to customer again and again, which is not a very good way of doing implementation. That's how we see it. From the customer side, they should be capable of running their business operation in a very seamless manner. Their end user should know what is regulation, what is law, what is a system dependency, and how a customer or a supplier will be processing an invoice. Once this is clear, until unless your last person in the workflow understands how this has to work, till that time your implementation is not successful. The day that last person in the workflow is capable of deciding and ensuring that invoice or the transaction is properly transmitted, yes, your implementation is successful. There will be certain phase of monitoring in this which has to be done by leadership. Beyond that, the system and the process will take care of it. Yeah.
Thank you, Sanmesh. I think that kind of wraps up in terms of the questions. So I think at the end, the conclusion is very simple. If possible, start early. Otherwise, your ecosystem will make you start early. And also, take the factor that the ASP is there. Now you need to basically get in. Of course, the most important element is also that, are you able to do a gap assessment? And this is generally true of large entities. Are you able to do a gap assessment where you assess what is it you are currently, what state you are in, and what is required from an e-invoicing implementation. That's the first step as such, yeah. You do a gap assessment, you get into the implementation, and please keep some time for the pilot phase, because they have provided a pilot phase. So, please keep some time for the pilot phase, and hopefully you'll be all right. Right? So that kind of sums up. Thank you so much, gentlemen, for basically,
Thank you.
Wonderful discussion. I think now the floor is open because we have spoken enough. Now it's your turn. If you have any queries besides what we covered, any burning questions, please feel free to ask. And the answer will be provided by the panelist.
Hello everyone, I'm Santosh representing our group CIO, Albata Holding. My question is what would be the error correction process, accepted error correction process for a document or an invoice which is already cleared by the system?
I think I'll point to Sangesh.
I'm sorry, actually, error correction process. There are two ways. I'll give again, every time such question comes, I give real implementation scenarios so that you believe my answers. There is one customer in Saudi, they use SAP Business One, right? How they implemented e-invoicing is very peculiar and unique to that. The IT head decides, I don't have manpower to make sure that the invoice created and the invoice transmitted are in sync. I don't want to do that job after the invoice is posted. What they did, they said, while the invoice creation is happening, make sure this goes to the authority server, gets validated, and if it is rejected, do not post to the account. Reverse the transaction. Close it there itself. Give an error and do not post to the GLs. This was their implementation. How can this be done differently? You create an invoice, post it to the books, send it to the authority. If error comes, handle it in the e-invoicing platform, not in the ERP. But the challenge with this is the ERP record and the e-invoicing platform record might differ. Right? This is genuine innovation. On the other side, how this is a disadvantage. This process is very efficient. How this is a disadvantage to us. We have invoice reconciliation tool, which we can sell and make additional revenue. We could not sell that to them. Right? Because this process is simple. If invoice is created, it is there with authority. If invoice is not there, it's not there with authority. Does this answer the question? Yeah. Thank you. And sorry, I'll just extend the point. When you are operating at 250,000, 300,000, 500,000 invoices per month, this is the process you should implement. Otherwise, you can't have a person sitting on the other side just reconciling 500,000 invoices here and 500,000 invoices on authority. And even if the error percentage is 1%, that is a big task for the person who is handling this activity.
Yes. Hello. This is Guy.
Sorry, this is why the gap assessment and early start is important. So the testing will happen between July and December next year. And for this, exactly for this reason, for the error handling. And one of the aspects of the critical success factor also is that you need to look at the ability of the ASPs and the tool, the platform itself, to be able to throw out these errors on a daily basis, at least in the initial days, that you're not accumulating 1 month of error correction data, right? So those are things, aspects that you need to be careful about when you're starting out, when you're evaluating the ASPs.
Yes.
Hello. So my primary question is, we are able to see threshold, say over 50 million dirhams and below 50 million dirhams. Can we expect some kind of guidance where very small businesses, like say, for instance, tax registration, VAT registration is not even required for someone who's below 375K. And similarly, 9% of the tax will not even apply if the revenue is below 375K and all that. So will we see some kind of a relief that is coming to small entrepreneurs or small businesses, or is it just that it is above 50 million, below 50 million, and the ecosystem will just force everyone to be part of the system?
So maybe
I'll check that up, and then Sangesh will add from his experience. Again, this is anyone's guess, right? I mean, what authority probably is gonna come out, but we can take the example of other markets here, right? So Saudi Arabia, I think this is something which Sangesh mentioned, almost 25 different phases and waves in which they implemented the whole thing. And the current phase or the next phase which is going to come is something of that threshold, 375 and less. So is that something, and again, knowing within the region, that's something which has been expected, right? So if one market follows certain route, the other markets also wants to follow. Is that something on the cards? Probably yes. But yes, as I said, it would be anyone's guess. But yes, if that is there over the next maybe couple of years, or it could be 3 years down the line, all the B2C also will come into picture. If that comes, so which means, yeah, VAT becomes that threshold or CT $100,000. Anything below that also eventually more that will come into picture. And that eventually goes back into the whole idea of collecting all the data and moving to that open data framework. Yeah, Sangmesh, you want to add?
I think maybe there is a fundamental thing, right? Effectively, what we talk about is a tax invoice, right? So which means that we are talking of somebody who's in the VAT threshold, okay? So currently, and the rate of tax is 5% for VAT. Just a small correction for you.
No, I was referring to the corporate tax of 9% where 375K revenue or, the profit is still exempted and all that.
Yeah, so what we are talking here is VAT, right? And in the VAT context, you come into the threshold only if you are doing transactions above 375,000, right? So then it is the element of tax invoice. So what we are doing is right now the tax invoice getting converted into an electronic form. Yeah. So right now the people who are generating less than 375 are not expected to generate any e-invoice per se because they are not in the VAT fold. Yeah. So just that from that perspective.
I'll just extend the point. Two things. I have limited intelligence. Second, I cannot position myself to, every one of us cannot position ourselves to speak on behalf of authority. Right? But if Mr. Rao had showcased those three ministerial decisions, 243, 244 and 65, I think. So if you go through that, there is one clause which says, and as determined by the ministry. Okay, that is a point which is open. Later it can become mandatory, later it can be excluded. We don't know. So there is a gray area there. But eventually we see the threshold to stop at that $100,000 limit. But beyond that, it is still subjective, right? The point is still open, it's not closed. It can happen that we increase business efficiency and do it. For example, if a product like Zoho comes in and they have this technology tool built in their software, it is easy for adopt a small business, right? So we don't know yet. There is gray area. Regulation says it as decided by the minister at a later point of time or ministry at a later point of time. So that point is still open.
Okay.
Thank you.
Yes.
Good evening, everyone. My name is Amit Agarwal, and I am here as Group CFO of Alfaris Group. First of all, I would like to thank all the panelists for a very insightful discussions and
Thank you.
giving us the knowledge. I was particularly moved by Mr. Mundra's insight into this is not only the compliance, it also has the capacity to unlock the capital. Personally, I have never thought about this thing like that. I always thought it's a compliance issue. We will do as and it will, when it will happen. But coming from your point and just adding to your point, it's not going to only unlock the capital. I also have a private equity background. So one of the biggest challenge doing the transactions, doing the M&A transactions that we used to do was to validate the sales and the revenue which is being asked by the sellers is true or not. And we had to engage with Big Fours and other firms to do a due diligence, which was extremely difficult and still we were not 100% sure. Now this could add that dimension, right? It will mature the market of the M&A in the entire region if that happens. So that's your point is taken. I'm just adding on to it.
Thank you.
Right? But my question is to Ram. Right? In one of the presentations, you said that e-invoicing would reduce the DSO. This is a part that I don't understand, right? My customers, if they don't pay in 90 days, they won't pay in 90 days because I'm just e-invoicing them. So how would my DSO reduce?
Maybe before Ram takes, thanks a lot, Amit. Probably I'll just add on that. Maybe I'll not answer, just add. He'll answer the specific question. I'll not answer that. It's for him just to add on your point. When I come from a corporate finance background only, and not just M&A deals, right? And that's where the whole why I'm saying from a lender perspective, because these actually helps you do that due diligence in a much proper way, right? So your complete credit history belongs there. And that's where on the spot lending can become quite easy. So that revenue-based financing, which has been probably one of the lacking thing here, many players will start coming up because they have the real data to give that credit history and immediate lending. Anyway,
absolutely, absolutely. It increases the credibility of the firms multiple times.
Absolutely.
That's for the same reason that you're looking to do the
prudent evaluation and be able to create funding out of the confirmed invoices. That's an experience that's from Latin America and from the European countries that's gone live at least 5 or 6 years back. The DSO is a real case study. I can share with you the details also. Primarily, number one reason is the disputes on invoice submission has come down. So that's a timeline that came down drastically. Okay. Then the invoice submissions and all of that is electronic, and in Latin America, I think it's also government related. So once e-invoice comes here, you either accept or reject, and therefore it gives you a clear indication of the start date of your DSO days. So this is even in Egypt, not known for paying on time. So this I've seen that in Egypt also happening, and therefore you can be optimistic that it will happen in UAE also.
Yeah, so basically the excuse of the rejection will go down. That point.
Yeah, yeah. So Amit, there is always the case that those who want to pay, they will always pay, right? So those who don't want to pay will come into that category, you will never achieve that, right? But there are a lot of organizations which genuinely do not receive invoices.
Yeah.
Okay, so those kind of cases is where you can say, yeah, but we can't help the guys who don't want to pay. Yeah.
So we'll take one last question.
Hi everyone, so I'm Ajit Jain, partner transfer pricing at AJMS. So my question is on tax transparency. So we have spoken about e-invoicing and connected with VAT, but when it comes to the data transparency, there can be significant impact on transfer pricing. I've worked across different jurisdictions where I've seen significant amount of adjustment happening because of the lack of data or because of significant amount of receivables in the books of organizations. So any country's economies also depend upon significantly on cross-border transactions, intra-group transactions. So my question is that this e-invoicing bring a lot of data transparency. Now I have not seen any other countries using that data for transfer pricing, addressing the transfer pricing disputes. But particularly in UAE, the question is that would that help in addressing the transfer pricing disputes where other countries I've seen billions of adjustment happening because of the lack of data, where invoices are not covering the markups, or invoices are reflecting the markups, or invoices are showing the rate of interest. So a lot of other things can FTA use that data as a base to address the transfer pricing dispute or to scrutinize whether the transactions are happen on an arm's length basis?
Can I answer? Yeah, I think Ajit, right? Okay. So he's a transfer pricing expert. So primarily, I think the first thing which will happen is, like you rightly pointed out, okay, there's a lot of data now getting into the FTA. Okay. So the first thing that we have to watch out for is what they do with the data. Right? The dispute resolution and all that, yes, it will come at a later date, but effectively, like we were talking about, from the VAT days, right, we had given a lot of data, okay. When it came to corporate tax, obviously they had the VAT data, right, and we have to see the result of that. Because one of the things when we were saying about, when we were doing corporate tax, gap assessments, was saying that, please look at what you submitted as a VAT data, right. So you're absolutely right that here is a third set of data which is now going on real-time basis. Okay, what happened with VAT was there was a reporting effectively on a quarterly basis. What you're now going to do through this e-invoicing route is basically give data on a real-time basis, and also, basically say that who is that, entity to whom you have sold or bought. So absolutely right. I would be worried about the first case where a lot of data is already there with them and what they do with the data. Obviously, in terms of dispute resolutions, maybe that is something down the line as such. Fair point. Thank you. Thank you, everybody, for being such a wonderful panelist.
Thank you, Mr. Girish.
I hope the other sea of confusion is cleared up today with the expert discussion. May I now request Dr. Bharat Bhutani, the former chairman of IBPC, to felicitate the panel speakers today, as well as the keynote speakers. Girish Chand. Next is Mr. Vivek Mundra. Girish, please be on stage. Mr. Ram Subramaniam. And Mr. Sangamesh Shirmath. Now call upon the sponsors, MCA, Mr. Venkatesh, Managing Partner, MCA Gulf, to be on stage for felicitation by Dr. Bharat Bhutani. I don't know whether Abhishek Jaju is here from AJMS, but I would request Vivek Mundra, Managing Partner, AJMS, also to be on stage for the sponsor felicitation. Venkatesh, please be on stage so that we can have a group picture after this. Mr. Vivek Mundra. Thank you very much, Dr. Bharat Bhutani. This event wouldn't have happened without the support of the event sponsors today, MC and HMS. Thank you very much for your support. And of course, the continuing sponsors of IBPC, TriStar, Tata, FMC, Lulu, Standard Chartered, Aster, HSBC, DPS School, First Response, all of them, thank you very much for your continued sponsorship for IBPC. And of course, Taj for hosting us, and the events team of IBPC. Thank you very much for the event. I can now say that the high tea is served. Thank you.